Hello and welcome everyone to today's session. We're going to be talking about battery metals and trying to understand the new ecosystem that we're seeing out there. We've seen big changes geopolitically. We've seen the LME come hard up against it when it came to nickel. And we're going to talk to a couple of stalwarts in the industry. We're speaking today with James Calaway, Executive Chairman and former Chairman of Orocobre from when it was a little tiddler. He'll tell you a bit more about that. And he's representing Ioneer, an ASX listed company. And we've also got Derrick Weyrauch, who's the President and CEO of Palladium One. Good afternoon, gentlemen. Thank you for joining us. If I may, can I get you, James and Derrick, to just introduce yourselves, and I'll pick it up from there with some questions. James?
Sure, fine. My name is James Calaway. I'm the Executive Chairman of Ioneer Limited. We're an ASX 300 company, and we are focused on the development of Rhyolite Ridge in Nevada. And our project is a 22,000 ton per year lithium project, but with a co-product of about 175,000 tons per year of boric acid. We're the most advanced lithium project in the United States. We are in a very heightened state of readiness to start construction. We are very well financed. We have a market cap of about 1.4 billion Aussie. We've got plenty of cash to do all the final work to get to FID. And we're in a very near-term position to bring quadruple America's lithium production. I have a long background in the lithium space, having been the chairman of Orocobre for all its formative years. And then for the last 5 years, I've been focusing as executive chairman of Ioneer.
And with that, my name is Derrick Weyrauch. I'm the president and CEO of Palladium One Mining. We're listed on the TSXV in Canada, and we're focused on the development and exploration of green transportation metals in very safe and secure jurisdictions. We're operating both in Finland, so in Scandinavia, as well as Canada. We have existing resources in Finland of palladium dominant with copper, nickel, platinum, and gold credits.
Thank you very much, gentlemen. Well, thanks for joining us today. We are missing someone else, but we're going to crack on. We think we've got the brains trust here, so I think we'll learn a lot. And if you're a retail investor, maybe pick up a few ideas or two along the way too. So, look, the world has changed. Obviously, recent events in Ukraine have changed things dramatically. We've got sanctions on multiple commodities. However, the basic thematic and the basic supply demand numbers for a lot of the battery metals have not changed. So how does it change your business, James? I mean, how do you need to adapt, or is it business as usual?
Well, I think that we as suppliers of critical materials, we respond to what our customers are interested in. And I think that one of the things that we probably can all agree on, for those that are at the point where you're doing serious offtake agreements, you learn very quickly that these customers are very concerned about their supply. It's been very much elevated, not only for political reasons that you talked about, both in Russia, but also in concerns about China concentration. But I think that more importantly, it's just fundamentals. At least in lithium, there's a big concern that the molecules just might not be there for the growth that's being put in place by the OEM. So, our business is to provide those materials as fast as we can and as effective as we can to their supply chains, particularly, by the way, in the United States, where we focus very much on building supply chains that start from the base materials all the way through the vehicle, all residing in the United States. This is a key focus that we're seeing, and a change in the nature of our interaction with the primary customers.
What's your take, Derrick?
Yeah, no, I agree with that completely. And I think as a result of recent events in Europe, I think there's a bit of a movement of de-globalization that is taking place, and there's going to be a few more protectionist borders put up. So, being able to supply commodities to fulfill the demand expectations from jurisdictions that have robust mining and development laws, I think, is really important. But also, what we're seeing is a change in the conversations with the end customers, and we see automotive manufacturers engaging more and more with the mining companies, looking at ways to secure the supply for their product, and they may bypass the conventional markets in order just to make sure that they can keep putting product into the market for that consumers are demanding.
Well, it's kind of fascinating. You used the phrase deglobalization, which is a big topic, but which potentially leads on to bifurcation of pricing. We're seeing alliances formed, but you'd expect Russia, China, but you've got India in the mix. You've got Africa sort of turning into Switzerland. They're not ready to take sides either. You feel there's going to be new alliances, new markets, and a kind of it's going to create problems around pricing, don't you think, James?
Well, I mean, when you look at least in the lithium space, the elephant in the room, of course, has been for a long time China, and I mean, I think people have been trying to make accommodation for the amount of material that has to go through China, and there's a general discomfort with that. So I don't think that's not driven off of the most recent events in the Ukraine. But like, for instance, a little known discussion should be talked about is the fact that in Russia, there's actually a significant amount of final processing that exists in Russia that then flows back into Europe. Well, that's over. I mean, that used to be the answer. Well, we don't have final processing in Europe, but we can ship it over to Russia and then they'll send it back to us. That's a great example of, the end of globalization. I mean, that story is stopped. So I don't know. I look at this and I think that people are not, I don't think in my market, people are spending as much time worrying about Ukraine in general. I think they're really just focused on fundamentals. And the fundamentals are that we're about to have a train wreck about 2025. Okay, that you cannot conjure up a scenario given the long lead times for building capacity. I mean, we both deal with this thing that people tend to miss in this modern age is building these capabilities, these mines and these production facilities takes years and incredible amounts of capital, and you can't respond quickly. So we need a longer view. And I think that the OEMs and others are starting to say, wait, we need to know where this supply is coming from. And we're really worried about 2025. And then and by the way, the curve accelerates between 2025 and 30, what they need. And so they can't even figure out how to get to 25. And then when they start looking between 25 and 2030, panic sets in. So I think we have to be there to try to encourage government policy to move these things forward more quickly. We've got to have the engineering completed and all the work done so that we can go into construction. And then even then it takes 2 years to build some of these facilities. So I think I personally think we're in a crisis that's independent of Ukraine. Okay. Is what I think.
I think that's fascinating because, I couldn't help but smile when you said move quickly and government in the same sentence. Because you're right, it takes time to build these infrastructures, and we're not just seeing it with the battery metals, we're seeing it with uranium as well, and a few other commodities where people are saying if we are going to create these ecosystems because we want it to be defensible, we want these critical mineral lists to be defensible, and so on, it becomes highly inefficient. And highly inefficient projects, I guess, make bankers nervous. They need to understand what it's going to do to pricing. Sorry to bring it back to pricing, but ultimately, as an ex-banker, I'm concerned about how do I make my money. So government's part of the solution, trying to understand pricing as part of the solution, and expediting our own infrastructure build process and financing it. Those are tough asks in the short time frame, which people are talking about and aiming for in terms of this supply deficit in name any commodity you want. Derrick, do you see a train wreck coming down the line too?
Oh, I absolutely do. Right, we're being asked as a mining industry to supply product, yet we're inhibited by governments acting slowly to allow us to advance projects. And we see that in many, many jurisdictions. And on the other side of the table, you've got another government representative saying, let's hurry up and let's decarbonize. And we're going to have all these initiatives and incentives to accelerate demand. In the case of the automotive industry, you see the automotive manufacturers coming out with all sorts of targets to change their product offerings. But there's a gap in the supply chain, and that is the accelerated permitting and development of projects. And I think what's really going to be critical, and people generally, I think, are becoming aware of this, is that the governments are now going to have to put up or just shut up with regards to these aspirational targets that they're espousing constantly, and they're going to need to assist us as miners and developers to provide the security. But also speaking about cost, I think the other thing to think about is we're going to see more analysis of the supply chain and more traceability, because there's going to be more and more of that I want to buy something that was made at home mentality. And the only way you're going to be able to determine that is having traceability over your supply chain. We've seen that very much in the cobalt space because of the proportion of cobalt coming out of the DRC. And I think we're going to see that in many other commodities as well.
I couldn't agree with you, really couldn't agree with you more, everything you just said. And I there is a mismatch. You as a developer of big projects, you sometimes feel like your neck's going to break off, because you're, on the one hand, you're every day there's some announcement of another, multi-billion-dollar factory going in, and you hear, the politicians talking about that if we don't move quickly, we run into catastrophic situation with the environment that's maybe irreversible. And so there's all this passion about this, but then you get to the bottom line, and you run into policymakers who say, well, we like that, but we really don't like mining, or mining has a bad history with politicians, particularly those on the more progressive side. And I am a progressive, so sometimes stunned by the whole thing. And the other thing is we have a siloed system of review. So, you find yourself in these sort of strange worlds as a practical matter. You're having to talk to somebody who can only talk about some little sliver of the overall implications of what you're doing, but you're stuck there. You're stuck in this policy paralysis because they have a blocking capability over one little thing. And if you try to say, well, what about all these major issues and, these major climactic issues, they look at you and say, oh, I agree with you, but I can't talk about that because I'm focused on my little piece of the sliver of the world, but they can block you or slow you. And so I do think, by the way, it's interesting this week that the President of the United States is coming out with the Defense Production Act, we think, statement that basically says it's time to get on with it in the United States. And I think that while he's caveating it all very carefully with, well, we have to do it with the right environmental rules and, we got to follow the procedures, but we need to get it done. It does help because when the president speaks about our plight, at least it keeps everybody focused on the fundamental of let's get on with it. And so that's pretty interesting new development in the last few days here in the United States to address this issue.
You can look at it from the other side as well, because there's recently been a project in the northern United States that has been blocked from an environmental perspective multiple times. It's a very significant potential provider to the battery metal space. So on the one hand, you've got these actions that are blocking the advancement of projects that have been, had a lot of engineering and investment and research done on them. And then a couple of weeks later, we think we should move things forward. So it's this sucking and blowing that doesn't work. But I think from an investor's perspective, the setup here is very good, because from a mass psychology perspective, I think what we're going to see is a fulfillment to some degree. I'm not a believer in these demand forecasts are actually real. I think it's going to be somewhat less than that, but there's certainly going to be an increase in the demand. There's going to be becoming a crunch point. So getting yourself positioned in projects or companies or commodities that you think are going to be able to take advantage of an environment where suddenly people say, okay, now we got to get at it and we got to start making the metal.
I agree.
That's where you're going to make your money. Now, we don't know when that Band-Aid is going to be pulled off.
But it's coming.
It's coming. So I think right now, for an investor, it's about positioning yourself in what you believe in, and you want to trade in where you've got teams that can deliver, and you're happy with the jurisdictional risk or lack thereof, et cetera, et cetera.
Yeah,
I agree with you.
It's interesting times, gentlemen. It reminds me, I kind of want to get onto what companies can do to take a bit more control, because we're sitting there waiting for the government. Again, we've seen this in vanadium, we've seen this uranium, we've seen this in multiple commodities where you're hoping for government to kind of step in and do something quickly. And whatever Biden says and does is, well, proof's in the pudding, right? Yeah, we saw like a German, I think it's called the economy minister, yesterday make a statement asking people to use a little bit less energy at home. Because they haven't got a solution or a quick fix for decisions that they should have been making over the last 10 years. So I kind of almost expect a minister to step up and say, would you mind driving fewer cars or drive less often? Or, the politicians need to be in step change with industry, but you guys need to drive that. We were talking to a company recently about the European Battery Alliance, who have seemingly got their act together a little bit, and they are seeing conversations around, the question around tariffs and incentives and funding and speeding up removing the red tape and speeding up the process of allowing companies to build quicker. I mean, clearly the Americans are talking that game, but you're saying you're not seeing it on the ground yet.
Well, no, I wouldn't say that. I think you are seeing it. It's coming, and I think to answer your initial question, there, it's very important for companies to engage with government and get involved and have the voice heard. Because if you hear something enough times, maybe at some point in time you're going to react. And as part of that, like I'm a member of the Canadian or the Critical Minerals Council for Canada. And that's, a group where we have the access to the government and our voices can be heard. And it's fairly new. Canada is certainly behind Europe. But I think those engagements and having those conversations need to start earlier or as early as possible. But if you don't have it, I think you're going to be stuck. And that's the reason that I happen to be on that particular council.
I would agree with you. Again, it seems like we talked to each other about all this, agreeing on everything. But I do think that also I think it's important in the engagement with government that it's not just the miners by themselves. The miners by themselves have a limit, at least in the United States, have a limited voice. Okay, where the bigger voice is, and that's what's coming now, is the OEMs who are engaging in this process now are very concerned, very, very concerned about these huge capital investments they're making and having like the chip disaster on steroids. That's what they're worried about. When they start going to Washington with the people that are producing the materials, say, look, hundreds of thousands of jobs are at stake here, and we're making tens of billions of dollars of investments, and we need this material. Okay, and we're big union shops, and so you get the unions supportive, et cetera, et cetera. That has more influence than the mining association showing up. So before they never were willing to really do that, but I think now, certainly in our work, we're seeing a much more complete engagement across the entire supply chain, all coming together to the government saying, now look, this is serious business now. And I think that that's finally sinking in, that something has to give here. Unfortunately, even if you have such an environment, you've got a tremendous amount of time that you have to have already invested to be ready to go through the environmental process. Now, we've done that. We've been at it for 5 years and spent $120 million on engineering on our project. So, we are ready, and we're really the only big project that's ready. So, part of what you said is right. You've got to be putting in place with good management teams, with really good engineering, with really good technical work, so that you are ready when the moment arrives. And I think that the moment's arriving for the people that have solid people working hard and have projects ready. And I think that's one thing we can control. We can control doing our own work, doing our environmental reviews, doing all of our testing, having our engineering and our flow sheets fully understood, our detailed engineering ready to go, finance essentially in place, so that we are able to respond when it comes. And I think it's coming. I think you're probably going to agree with me about this.
Oh, I'd absolutely agree. And I also suggest there's another little complication that makes this whole situation that we're living in right now much more difficult to understand and to forecast. And that's really the inflationary environment that we're seeing. So if you look right now at fuel prices, I happen to be in Northern Europe right now, and they're a heck of a lot higher than they were last time I was here. Same thing in Canada and the United States, et cetera. Well, the average consumer that now sees the cost of filling up that gas tank doubling or tripling is going to have a reaction. And maybe they're going to say, you know what, maybe it's now time to move across to that electrified vehicle. However, look at the underlying costs of the metals going into that electric vehicle, and that's already a premium product. So now you've got a consumer that says, I'm either going to pay this higher cost every time I go to the pump, or I'm going to have a bigger upfront cost to be part of the decarbonization solution, while we're also seeing huge inflation on the food side of things. And I don't think that's completely rolled through the system at this point in time. I think we're going to continue to see a lot of inflation there. So, you start thinking about the average consumer and saying, okay, I've got so much money to spend. I've got to pay my rent or my mortgage and my food, and, make sure the kids are clothed and can go to school. So, different people are going to make different decisions with regards to the transition to different modes of mobility. And, that's a big part of the reason why I'm not at this time fully buying the demand forecast. I think there's going to be a fairly protracted transitional period that comes in play. And again, we don't know the timing. So if I'm an investor thinking about this space, I've got two extremes, and the answer is going to be somewhere in the middle. And the one extreme is we're going to be fully electrified by 2030, 2035, whatever the number is. Whereas the consumer might say, my God, the price of nickel has now gone up to $15 a pound. And instead of buying that car that previously just the metal content for the battery was $3,500 or $4,000, now it's going to be that much higher. That's a huge burden.
Well, I agree with you. And I don't know the answer to that question. The signals to the retail market for buying electric car versus not a car. I don't know if most consumers sit around and think about nickel prices per ton or that, but they know it because the sticker price goes up. Okay. And how that gets passed on to the consumers is a very interesting question. And it's a very dynamic thing. So it's a complicated question, but I agree with you. It's a concern I have. And certainly if you have lithium prices, like for instance, in battery material at $50,000 a ton, it has significant impact. Now, interestingly though, if you look at actually how prices are being set in the contracts, what's happening is nobody on any scale, little spot prices, it's one thing, be anything, but China's spot price, it could be, whatever. But when you start talking about long-term serious offtake agreements with major customers, nobody's talking about those prices. Okay. What the conversation really is about floors and ceilings, and about how we structure floors and ceilings with a floating off of some indexes. Nobody can come right now to a fixed point contract that has any duration or size. So to solve that problem, everyone who's seriously working on this, and I know you know this, are working on floors and ceilings, okay? And what's interesting is that the floors that people are willing to set now are sufficient to create adequate economic incentive to build, even in an inflationary condition, and offer enough headroom for a spectacular return. But we're not talking about $50,000 a ton material, okay? And I just say that my general view is that the floors and ceilings for lithium are somewhere between, and I'm talking about like battery grade hydroxide, $13,000, $14,000 for a floor, and say $25,000 to $30,000 for a ceiling. Okay, and then floating with an index. That's the real conversation right now, by the way. So I do think that that's encouraging, because if you look at $50,000 or $60,000, you start having in your mind like, wow, that's really looks terrible.
But the first part of that conversation is, I need security of supply. Now we can have a conversation about that floor and ceiling pricing. But I first got to know that your supply chain, where your source of materials is, et cetera, meets my prerequisites. And I think there's an evolution on those prerequisites. The second question is price.
By the way, and I'm sorry, this is a very interesting conversation. I just like to say that also that at the industry level, at least in my particular little part of it, the lithium side of this, I'm sure it's different in each one of the segments, but in our case, where a lot of focus is going is, how do you create end-to-end supply chains that are domestic? Okay, because what you find out when you dig into the details is that there are certain parts of the supply chain that seem quite robust, more than enough investment. Like, for instance, from the pack to the car, we shouldn't spend too much time worrying about that right now. When you move back, even you start in the United States, you start talking about cathode manufacturing. There's a lot going on there, and it looks encouraging. But then you get into the processing from technical grade carbonate to very high performance lithium hydroxide, and there's a little hole there. But the good news is, everybody, because they're so focused on this thing you talked about earlier, the domestication of a complete supply chain, that creates a focus for everybody on making sure there's no gaps in the supply. Okay.
Which is also an opportunity for investors, if they can participate in identify those gaps.
Components, exactly. And I do think that is what's happening, is you're starting to see maturity beginning to set in, and a real focus on the details, because any break in that supply chain creates external vulnerabilities. And so really, it's to your point, and I think that's encouraging to see how focused everybody is on making sure that we have complete supply chains in the United States. And I think we're going to have not 100%. I don't think we have in the United States ability to provide 100% of our own material, but I'm actually kind of optimistic, with some intelligent policy and with a lot of hard work, that we can probably come up with 50% of our supply domestically. 50-60% may be able to be achieved.
Yeah, and it doesn't all have to be domestic. You just have to have security of supply. So there's a plan B. Yes, I may like X percent, to pick a number, domestically, but it doesn't really need to. Maybe I have a friendly neighbor country that I want to get supply from, right? You think about Canada, the US. Canada is a very safe and secure jurisdiction from a political perspective. But, I suspect the U.S. ought to be fairly happy with supply there. And if you think about the European environment, I think if you're a member of the EU, it's all good. Not so worried about one country over the other. So, there's a lot of layers of this onion that need to get peeled and thought through. But fundamentally, can we as industry, or individuals, if you're thinking about vaccines, if you want to go back to that, can we have security of supply of what we need, and what are the measures that we can put in place to make sure it happens?
I agree with you.
And I think if you look at the example, Europe, obviously with the issue of shutting down of Nord Stream 1 and 2, trying to reduce their reliance on Russian gas and oil, have turned to North America and said, obviously, you're our allies. We'd like you to help us kind of fill that void, as it were. But then you've got, in the same breath, you've got Canada, an ally, saying we're going to reduce our production of fossil fuel by 40% by 2030. So there's no reliable ally, because politically they've got their own agenda. And as a North American more broadly, you are gonna have to try and work out what's real and what's not, because to your point earlier, Derrick, you're saying you're not quite sure about the demand numbers, because people may be doing a time and motion study and working out when is the most efficient time for me to move from my internal combustion engine through to battery and may delay that. Likewise, we've seen in multiple industries what companies claim to be able to produce by X date doesn't always match the reality of the situation. So there's a lot of variables.
Oh, and to your point on politics, we talk about the energy situation there. Canada's talking about decarbonization, yet the Keystone Pipeline has been a hot topic. Why wouldn't we complete that construction to be able to provide the energy down into the U.S.? Darn thing already comes to the border. And instead, we've got the U.S. having a conversation with Venezuela. I'd suggest it's probably a more challenging jurisdiction, if an environmental, perhaps from a labor perspective as well. Like how does that logic make any sense, right? So I think this is where we have the problem that we've got an environment globally where politicians take decisions to stay in office and in power versus taking a position and saying, what's the best thing to do in the situation for the masses?
Okay, I agree. And let me, you kept talking about, the question of the uncertainty of demand, and its impact by higher prices and other things, and, trade-offs and this transition. And I generally agree that there's a real possibility it's a slower transition because we don't put in place the capacity to make the transition even more than the demand. But I'll tell you where, if you want to talk about a little boogaboo, one of those things I worry about every day is I look at sort of, let's call it the broader analyst community. Okay, whether they're independent analysts or parts of investment banks, regardless of those. I think there's a tendency to take what companies say is going to be their production profile and timeline and just take it almost at will, maybe do a little discount, whatever that means, and then throw it into a big spreadsheet, and everybody looks and adds it all up and says, wow, we're going to, have all this production. But, having built a large lithium production, about to build my second one, I look around at all these projects that are on that list and I think they don't even have a fundamental flow sheet, or they haven't done, they're so far from that. And so I'm on the demand side, I agree with you that there's a risk that it will be slower, but I'm more concerned about the exaggeration of the amount of production that's coming. And that creates a mismatch in all scenarios as far as I'm concerned. So I think the supply side is the main concern that everyone should have right now.
Well, yeah, and I agree. I call what you described there as spreadsheet mining. I can sit at my desk and plan something out, but is it real? And this is where I think, the investors need to be looking at the companies and, trying to figure out, are they spreadsheet mining or are they actually doing the heavy lifting? Where are they with regards to, for example, earlier stage projects such as ourselves? Have they even initiated baseline environmental study? What are the gating issues once they've got the information, et cetera, et cetera? There's layers and layers of complexity here. So, this is a complex industry. It has lots of social issues. It's got reputational issues. And I think as an industry, we need to be forthright and transparent and also, really educating people because, the retail investor, for example, may not know some of these nuances. So it's incumbent upon us to talk about them, to make them aware that you should be asking the question, get them to explain metallurgy a little bit more. Why is this going to work? Why is that not going to work?
Well, by the way, what's interesting is I agree with you. Metallurgy, I'm obsessed with flow sheets and metallurgy. We got a master's degree in philosophy, but I've spent the last year studying flow sheets with really smart chemists but it's hard to get people to focus on this. They want the headlines and to some extent the stock market actually rewards the big talkers, okay, and the exaggerators more than the people who say, you know what, I'm going to get my head down like we are, and I'm sure it can tell you as well. My team, we spend our time focusing on delivering, okay, because enduring value for shareholders and growth and value comes from those that actually can execute against this difficult objective. I mean, I look at my example in Orocobre, we've turned that from over $27 million. It's now like $6-7 billion business with it's a real business. People that have been our shareholders at Orocobre have done extraordinarily well. Okay. Same thing at Ioneer. We're totally focused at Ioneer. I mean, we do not spend our time trying to go to every conference and promote ourselves. We focus on delivering great engineering, great pilot plants that have been run in long periods of time to make sure we understand our flow sheets properly. We have, tested and tested and tested so that we are ready, to do this. And, building $1 billion facility from scratch, okay, out in the middle of nowhere, okay, if you're not puckered up and you're not working yourself to death and trying to deal with risk management all the time and concentrating, that means you're not really doing it. And I mean, it's to your point. And I think that the investors would be best served if they spent time asking the question, who the hell are these people that are behind these projects? How many times have they ever delivered anything, okay, that actually worked? Okay, because if you just took those two criteria and you went across at least the lithium space, about 2/3 of these supposed projects are by people who've never done it in their life. So the chances that they're going to actually do it is low. So you can differentiate there. And then, of course, you need to understand the quality of the rocks or the quality of the materials, because bad chemistry in lithium is bad chemistry. And we're now having, by the way, in my opinion, a delusional conversation about direct lithium extraction. I mean, you just want to talk about a funny one. See, it's the perfect storm because for misunderstanding, because the direct lithium extraction idea is applied to mostly lousy chemistry. Okay, it's trying to bail out projects that don't make it using known understanding. Okay, and then you got the black box science guys who are sitting over here playing around with material sciences and on absorbance and other things, and they've never built an operating procedure in their life. Okay, and they're come together to tell the story to the market. Oh, we are, this is the answer to all of our problems, but they haven't produced a ton yet. Okay, so I think that kind of stuff, okay, gets a lot of press, and it even plays into the environmentalists, because they envision, thermal flows where they can just, produce geothermal heat, and then we just pluck the lithium out. It's just very interesting, and shoot it right back down. All the contaminants, everything goes back down in the hole, and we just have this virtuous loop. The problem is it hadn't happened, okay? And we're having expectations about this that in my opinion, are great for the promoters, but dangerous, very, very dangerous for realistic supply expectation. That's a big problem. And maybe not be the same in your industry, but over on my side, this is a big deal.
Yeah. Well, and I think, investors need to take the time to educate themselves as well. We've got a system in Canada that I think is pretty good. It's got its warts as well, but it's the National Instrument 43-101. If you actually want to think about this space and investing in this area, read them. Go download it. It's publicly available for any of the public companies, right? The smaller ones, the majors get away with not doing it. But go read the thing. And you know what? Read a bunch of them. Get yourself educated. You'll get a flavor for what is important. And if you've done enough reading and educating, you're going to get a sense as to, what questions you might want to ask of management. And, I highly encourage people to do that all the time. And I love it when I'm at, a retail conference like the PDAC, which is coming up in June, and you get these young people are still in university or they just graduated, and they say, I'm really interested in and they're treating the investing as a video game, right? This is trading in and out, and they've got no clue what they're doing. They say, how can I get better? Go read the darn reports and educate yourself some more.
Well, and by the way, that 43-101 standard is a very high quality standard for looking at resources. And I
But
agree with
it's the 43101 standard. It's only a prescriptive format for disclosing information.
correct.
They're not all the same. You got to read it.
Well,
The question I get a lot is, do you have one? Sure, I've got one. The other guy might too.
But they're different qualities of them.
And different qualities, they're different statuses of projects. You got to educate yourself.
It's sometimes what they leave out that is the concerning part of that. Now, gentlemen, you did give me a time frame to work to, and you're enjoying this as much as I am. I'm just subconscious that perhaps we've opened up a can of worms of fantastic ideas for the retail guys, and maybe it's something we need to come back to, because there's a lot of rabbit holes that we can go down. But if you're okay, I think we'll wrap it up there. We'll look at the questions that come back in, maybe get them over to you, and maybe if that's something that you want to follow up on, we can do that. But for retail investors, listen to these two guys. You're not going to find smarter in the mining space. I think some big topics discussed today, certainly around what mining companies need to do to take a little bit more control of what's going on geopolitically out there, what you need to do. So a degree of honesty with yourself, a degree of honesty from the mining industry, the companies themselves, and education. I think it seems to be the call from Derrick, certainly, and James too, I suspect. So, gentlemen, thank you for your time. Do you want to leave us all with one thought?
Well, my one thought would be, this is a great time to be investing in the industry. Do it with people that understand what they're doing and are committed, deeply committed, and have great, outstanding resources, because great resources with great people and determination make for real enduring value. And I know at Ioneer we have that, the combination in place.
And I absolutely concur with that. And just add, travel safe and enjoy your families. Stay healthy.
Amen.